So our subject is now, yes, our subject is financial services. Okay, now? Are you know the syllabus? Yes, our topic, our subject is the financial services. We have a total 5 units. We have a total 5 units. So 5 units, we have a total of 6 classes. Every day, 1 unit. So today is the introduction to the financial services. Okay. Today our topic is the financial services. So financial services, second unit is the leasing and hire purchase and venture capital. Then third unit is factoring, forfeiting and securitization. And unit number 4 is investment, trust and mutual funds. And unit number 5 is merchant banking and credit rating. This is a total of our syllabus. If anybody have a textbook, if you want to send this syllabus copy in your group, anyone create our group. So be financial services third year 6th semester. So I will send any notes and corresponding important key points in your group. Okay, na? Understand my voice? Yes. Okay. So our topic is the financial services. What is the financial services? Is the financial services is a important financial services is the integrated part of the financial system. It is important to the development of any country and financial institutions and financial markets and financial services is promoting the economic growth any country or any organizations that is the finances. It is a two groups. Financial services can be broadly divided in two groups. One is the production groups, one is and the second one is the service group. What is service group? The service of the financial institutions have emerged as a key parameters of the performance. That is the financial uh, services. Then second one is financial institutions increasing the competition and improve the product and range, enhance the delivery of the channels is the quality of the services. So this is the two categories of the financial services. Any country or any organization, the financial system is a very important key role. The financial system play a important role in our country or our economy. In fact, the difficult to the economy system, they function as the systems. Then, what is the meaning of financial services? Financial services, the term is refers to the mobilization of allocation of the savings. What is the financial services? The term financial services refers to the mobilization of the funds and allocation of the savings. It is including all those activities concerned with the process of converting the savings into the investment. And financial services is a intermediate such as merchant bankers and mutual funds and venture capitalists and commercial banks and insurance companies. Intangibility. Intangibility we can see under that is a financial like a tangible items. Financial, the first characteristic is intangibility. Intangibility means it is a financial service is a invisible, which while the other services like repairing, constructions, etc. And they can be observed in the physical form of the commodities, physical form of the commodity. This is called intangibility. Then second one is derivations and Financial services is the derivates the financial markets. They form the part of the financial market and are also extend the catalogs in the market and operations. Then next one is distribution of risk. Distribution of risk means any financial services, the financial matters is the risk related items. So financial service make a profitability development of the funds and enable the investors to the distribute risk in the multi uh, actions. Next, assistance to the investors. Assistance to the investors means here the financial services or financial service industry provide the multiple services to the investors and same time extend to the assistance to the investors assessing the risk. Even investors with less knowledge about the financial markets can access various financial products. So your financial services are typical sold. The production is manufacturing and sold and production supplies to the consumed at the time of unlinked physical commodity. Next, traceability. The financial services are okay. Next, link related character. The financial services act as a link between the investors and borrowers. They provide the various avenues to the investors for the investment and spreading out the risk. Okay, so these nine is important characteristics of the financial service. This is one more important question in examination point of view. We first one is the integrity and derivatives, a link, distribution of risk, assistance to the investors, and scalability, and agent and traceability. So these are 9 points are important. The next one is importance of financial services. So this is also supposed to asking the examination point of view exam question. This is what is the importance of the financial services in any financial system of work. If any financial system play the key role and important of financial services cannot be undermined is a necessary to become evident terms of the investors investment into the financial assistant financial assets and real assets other than items or etc related to the important services. Uh, Here are some key points in financial services. A total of 6 points is there. The one of the important point is the economic growth. What is the economic growth? Economic growth of any country directly promotional to the growth in savings and culture and investment scenario in the country. Financial services or industries are effectively mobilizing the savings of the individual and channels them into the productive investors for the generating the attractive rate of the return to the investors. This is the one important point is the economic growth. The first important point in the economic growth of financial services. Then second one is the promotion of savings. Promotion of savings means any finance savings are utilized to the investors, like manufacturers. The financial service industry mobilize the savings of individuals and make it available for available to the investors, or helping to the investors, or cooperate to the investor. This is the second point, is the promotion of the savings. Then third one is capital formation. Capital formation means this is the, there are two types of capital, long term or short term, any working capital like a long term capitals. Financial service of industry yes. Next, capital formation. Financial service industry perform the various capital market and money market intermediate services to the savers and borrowers for a efficient transformation of the savings into the investment. The investment. Next one is the employment opportunities. Employment opportunities means here where is the goods are manufactured, the creation of the goods, so where required in the employment. So financial service industry provide the directly and indirectly employment opportunities to the millions of public. This is one more important uh, point of the financial services. Next, contribution of GNP. So GDP, gross financial service industry contribution to the GNP in increasing year after year, the economics year by year it is increased by GNP. The contribution of GNP, the year by year it is increasing portion. Next, provision of liquidity. Provision of liquidity means transactions are related to the cash through a process of allocation and reallocation of savings, allocation and reallocation savings of the investors and financial service industry is the timely liquidated to the financial system. The total 6 important points is there. This is important examination point of the question. What are the, they are asking in the, what are the important financial services? We write as the 6 points. It is related to the 8 marks question, or we write the 6 points. One is the economic growth, then second one is the promotion of the savings, then third one is the capital formation, fourth one is employment opportunities, and fifth one is the contribution to the GNP, and provision of the liquidity. These important points is there. Okay. So one more important, this is the importance of the financial services. Okay. Next is the types of financial services. Types of the financial services. Types of financial benefits. Yes. Types of financial services. We have two types of financial services. Two types of financial services. Number one, the capital market related intermediate service, then money market. So capital means it is a long-term investments. Capital means here we purchase of machineries, eh, equipments, and materials. These are regular long-term benefits given items. So that is a capital service. Then second one is the money services or money market. Money market means a day-to-day regular work, like a working capital. It is a second one is the money market. The financial services provided two types of services. One is the capital related service. Then second one is the money related services. Capital related services means here The capital market consists of term lending. They provide the long-term loans. Long-term loans. So your minimum 1 year and more than 30 years. Up to maximum is the 30 years loans are provided by the productions or who require the money. Then second one is the money market is these intermediates fulfill a requirement of short-term funds, right? Short-term funds to investors to the and corporate sectors and corporate societies and others. These two important services provided by the financial services. Number one is capital market, capital related, then money market. We say simply that capital market and money market. Okay, no? So these two services are provided by the financial services. Then next one is a fund-based financial services, fee-based financial services. This is the differences. What is the fee-based services? What is the fund-based services? Financial services offered the various intermediates in the financial market can be divided two types. One is the fund-based or assets-based services. Second one is the fee-based services. Both are the non-banking financial corporations. These two is comes under NBFCs. NBFCs means non-banking financial services. So here, number one, first one is the fund-based. Here the major portion of income is generated from the interest spread by the between interest earners and interest paid. And fund-based is the already investment we put the investment, we get the interest the uh, timely like this is the fund based. Next, fee based means here major portion of the income is derived from the fees. Such requires so a lot of experience handling the multiple portfolios like institutions from the institutions from assets of etc. This is the fee based financial service. Then second one is in fund based services, it includes a lot of expenditure in terms of the interest and brokerage. Here expenditure is the maintenance, administration, and office related to expenses as a portion of expenditure. Next year, fund based required to providing asset based financial services. It is a alternative or talented based projects. Okay, these are 4 or 5 differences between the fund based financial services and fee based financial services. Okay, no. Next year, the services provided by the services provided by the companies here. In fund based, these are examples of services: underwriting services, leasing financing, hire purchase and purchase, venture capital financing, and bill discounting, and insurance services, and for factoring services, forfeiting services, housing finance services, and mutual funds, and money market securities, etc. These are related to the fund-based services. Fund-based services is the underwriting services, and leasing finance will detail on next topic. So underwriting services, lease means you know the lease. We are paying to the some rate of interest or like that is leasing finance, higher purchase and financing services, and venture capital financing and bill discounting, and insurance services and factoring services, forfeiting services, and housing finance services is the examples of the fund-based financial services. Next, what are the examples of the fee-based services? We have total related to the banking sector like merchant banking services, merchant banking services. credit rating services, securitizations, loan syndication, portfolio management services, and depository and custodian services, stock broking services, debenture services, and project advisory services, and NRI services. These are examples of the fee-based services. Under important is merchant banking, credit rating services, securitization, loan syndication is the key used more. Next year, what is the fund-based services in financial? Fund-based services means here the following some important points discussed here. Discuss. Number one, lease finance. What is the lease finance? A lease finance is a commercial contract between the owner of the equipment and prospective user of the agent. What is the lease? Lease is a commercial contract between the agent. The owner would transfer for the rights the use of equipment of the specified priorities. Yes. Okay. Then the leasing finance services, fund-based services, important services is the one of the services leasing finance. Leasing finance means the legal agreement between the equipment of the owner and prospective user use of the property or and equipment or agents. So this is the leasing finance. Then hire purchase finance. This is also important. You know all of what is hire purchase. Hire purchase takes equipment on lease, leasing, rental, showing the tax deductible expense, but leasing cannot claim the depreciation and may not show the leased asset in his balance sheet. So this is the hire purchase finance. Hire purchase finance means it is the equipment or leasing and lease rental in showing the tax deductible expenditure. Okay. Next, venture capital. Venture capital is related to the risk related capital investment. The venture capital is risk capital initiated by the entrepreneurs in a risky venture, and capital is contributed in the debt and equity. So here, venture capital financing is a risk capital initiated by entrepreneurs in a risky venture, and capital is contributed in the form of the debt and equity. Then insurance services. Unexpected events. If insurance is contract between two parties where one party is called insurer and he takes the fixed some amount called a premium. So insurer and insurer. Okay, here two parties in. Next here, types of insurance: general insurance, life insurance. Life insurance means insurance on human beings. That is life insurance. General insurance means here the insurance on the things, goods, values. That is general insurance. Health insurance is the insurance on the human beings' health. So here life insurance is a continuation insurance. Okay. Next, life insurance policy consists of the pure endowment policies. Life insurance policy is a pure endowment policy. Remaining second next. Okay. And health insurance, general insurance, term policies. Term means we are taking a 1 year policy. Every 1 year it is a renewal. But endowment policy, we are taking some 15 years, 20 years. The life of the person or human being. That is the life insurance. Next, factoring services and forfeiting services. Factoring services means here, factoring services is a provided conversion of a credit bills into the cash. Factoring services means factoring is a process of conversion of a credit bills into the cash. Okay, this is factoring services. Account receivables like receivables and other credit dues resulting from the credit sales appear in the books of accounts. So it is related to the trade services. Next, housing finance. Housing finance is a priority sector to the industry in various plans have the and the need of the promoting housing finance schemes, particularly for the poorer people, poor and weak people, weaker sections. It is useful to the society. Next, mutual funds. Mutual funds mobilize the savings of the individuals and corporates and invest them into the diversification of the portfolio of the financial assets. Next, next one, underwriting securities. What is underwriting securities? Corporate sectors or corporate organizations a time to time basis issue various securities to the public or a subscription to the fulfill their long-term capital requirement. So this is the underwriting securities. Means here they are given sureties to the newly entered. Okay, yeah, underwriting. So underwriting means here a newly introduced in the market, new companies or entrepreneurs. They given the existing company or existing entrepreneurs are given the sureties. They get the some underwriting commission. So it is a maximum up to 5%. Next is our ninth point is dealing in secondary market activities. Dealing in a secondary market activities. The practice in a money market instruments like commercial papers, certificate of the depositors, trustee bills, discounting of the bills, etc. related discounting and dealing in a secondary markets activities. A total 9 important points is there in the fund-based items. Number one is the leasing finance, hire purchase, venture capital, insurance services, factoring and forfeiting services, housing finance services, uh, and mutual funds. Next, underwriting securities. Last one is dealing in a secondary market activities. These are 9 important points is important. The examination point of view, it is related. Suppose sometimes asking 8 marks question, sometimes asking a 12 marks. Suppose it is asking 8 marks question, you write a side heading so briefly. Then it is a 12 marks question. The 9 points is expanded related to the 12 marks scope. Okay. Next. Then second one is a fee-based services. What is the fee-based services? Under the fee-based services, already we learned now merchant banker services, credit rating services, securitization, loan syndication, portfolio management, and mergers and adjustments, corporate reconstruction services, deposit and custodian services, and stock broking services, and like stock exchanges, debentures services, and other NRI services is provided by the services examples to the fee-based services, fee-based financial services. Under that, first one, the managing the capital issues. Then fee-based services, managing the financial services. Under financial services, management of the pre-issue and post post-issue activities are relating to the capital issues according to the SEBI guidelines. So this is managing the capital issues. Next, second one is the merger and acquisitions. Mergers means here in India, the role of the acquisition and mergers has increased in recent years due to the privatization and globalization of the economy. So mergers is important. Means here two unknown companies tie up and enter in the new company like amalgamation, absorption, reconstruction. Amalgamation like absorption. Okay, here X company and Y company amalgamated, form as a new company, that is XY company. Or examples of A company, B company is already existing company in the market. They enter into the agreement, they start the new business, A and B name. So that is the merger of the acquisitions or assets. So what is the benefit here? The capital is increased. They open the more branches. They increase their business. That's why they merge the companies or organizations. Next one is the credit rating services. In what is the credit rating services? In credit rating services, it is essential given on export opinions. So, sorry, credit rating is essential given to the expert opinion by the rating agencies on the relating to the willingness and ability of the issuer a debt instrument to meet the debt servicing obligations at time to time till it. Okay. Next, depository and custodian services. Depository services means these services are refers to the safe custody of the share certificates and securities or keeping of the deposits of the physical handing of the receipt and deliveries to the customers and sales and promotion of the services. Examples of collection of dividend, collection of and right and uh, rights, this one, bonus, etc. This is the depository and custodian of the services. The copyrights, they collect the dividend amount, copyright amount, bonus amount, etc. That is the custodian services. Next, securitization. Securitization means it is the packing of the pool of the financial assets into the marketable securities. There's a typical liquid assets are connected with the converted into the securities. So this is securitization. Okay. Okay. Next. Next is the fund-based items. In fund-based items, are leasing fund-based items. Okay. What is the fund-based items? In fund-based items, financial services offered by the different financial intermediaries can be classified into the categorization fund-based and fee-based services. The objective of this unit means the fund-based unit is a comparison and understanding of the different types of fund-based financial services, and fund-based services primarily deals with the providing fund fulfill the financial needs of individuals and corporates and other leasing financial institutions or insurance services, etc. Okay. Now here, what is the meaning of fund-based? Already learned before. In case of fund-based financial services, funds are arranged for the customers and financial intermediaries. They get some charges, certain percentage of interest for the amount of the fund utilized in the business. This is the main. Next is the major types of fund-based activities, including it is related to the working capital. It is related to the working capital to the entrepreneurs in the form of the entrepreneurial credits like cash credits, overdraft, demand, demand drafts, and loans, and bill discounting, etc. The services provided by the fund-based services. Here, in fund-based services is already we know a leasing of finance, hire purchase, customers, consumer credit, factoring and forfeiting, venture capital, housing loan, and bill discount. These are important services provided by the this fund-based items. What is the hire purchase? Here, one more important services is under fund-based is hire purchase. This is also important question. Sometimes they are asking a 4 marks question. Sorry, 8 marks question. See, the hire purchase. What is Hire Purchase Act 1972? Hire Purchase Act in implemented in India is in 1972. What is hire purchase? And as an agreement under the which goods are let out on hire and under which the hire has option to purchase them into the according with the agreements. So in hire purchase is the important contents or points under hire purchase. It is the first point is position of goods delivered to the hire and the one of the used by the farmer. So who is the owner? The owner is the owner transfer his rights, the some properties transfer to other temporarily. This is a hire purchase. Position of goods are delivered higher by the owner, the use of the farmer. That is first point. Then second one is the ownership lies with a person lending. Ownership lies with a person lending. This is the second point. And the important points under hire purchase agreement. In agreement here total 6 important points is there. Number one, position is changed. What is the position condition? Then second one is ownership related. Third one is involves the credit to the hire by the owner and condition of the rent. What are the rules and regulations related to the rent payments? Then next fourth one, installation charges. We are placed one place to another place. It is a movable property. That is the what are the hire charges, installation charges like who bear that installation charges. That is also one important point. Next is the ownership property goes there higher on the payment of last installment as agreed upon. So up to last installment paying, so there is no change in ownership. After payment of the final installment, the ownership is a change. Next, hire vest in the option, termination of the hire purchase agreement, and time and can be discounted for the installments. These are 6 points is the important hire purchase agreements or important contents in hire purchase agreement. Okay, na? Yes. Next one is the bill discounting. Then second important point is the bill. Next one, bill discount. What is the discounting? This is a common word. The term invoice discounting or bill discounting or purchase of bill convey the same meaning in case of the genuine credit transaction, seller and of the goods to meet the working capital requirement, events, etc. So according to the Indian Negotiable Act 1881, according to the Indian Negotiable Instrument Act 1881, the bill of exchange is an instrument in writing containing an unconditional order signed by the maker directing to the certain person to pay a certain sum of money only to or to the order of any certain person or to the bearer of that instrument. That is the bill. According to the Indian Negotiable Act 1881, the bill of exchange is an instrument in writing the containing an a conditional order signed by the maker directing uh, a certain person to pay a certain sum of the money only to or to the order of the certain person or to the bearer of that instrument, that is a bill of exchange. Here, types of bills also important. Here, total four types of bills. There are four types of bill. Number one is demand bill. What is the first one? Demand bill. Then second one is documentary bill and a claim bill and a sense bill. A total four bills. What is the demand bill? It is payable immediately at a sign, a bill on which no time of payment or due date is specified. That is a demand bill. Next one is essence bill. These bill allow the drawee to have a period of credit term. They give us some period of time, that is a particular time related bill. Next, documentary bill. Third bill is documentary bill. These are the bills that are accompanied by the document that confirm that a trade has taken place between buyer and seller of the goods. That is called documentary bill. Next, a clean bill. Bill of exchange, drawn payable overseas, and which are not accompanied by any commercial documents. Any commercial documents, that is a clean bill. As a result of interest rate charged on this bill higher than the documentary bill. This is a clean bill. How many types of bills? We have total four types of bills: demand bills, unseen bills, documentary bill, and a clear bill. Here, what are the advantages of bill? What are the advantages of bill discounted? What are the advantages of bill discounted? It is a type of short-term source of finance. What is the first advantage? It is the one type of source of a short-term finance. Okay. Then second one is it is not a lending. It is not a lending. No tax. It is directed at source of while making the payments. This is the second one. Then third one is flexible in terms of quantum of investment and fund and duration of the investments. It is a flexibility in terms of the quantum of the investments. Next, for a banker, it offers a greatest security in terms of his finance. Okay, then lost advantage is certainty of payment and profitability. Both are unique advantages of the bill discounting to a banker. Here, for five advantages there. It is a type of one source of the short-term finance. And additional lending or no tax directed source, flexibility there. And for banker offer a greater security and certain payment of profitability, both unique and advantages of the bill discounting to the bankers. These five advantages is important in a bill discounting. At the same time, some disadvantages there on a bill discounting. Number one, it is based on invoiced discounting. It is expensive as compared with the other mode of short-term finance. Invoicing or invoice discount is expensive than compared with the other mode of short-term finance. Then second one is RBI encouraged, RBI, Reserve Bank of India is encouraged bill discounting in India and offered low charges on bill discounting. Offered a low charges on a bill discount. Next, bill discount is a different in a different countries. In different countries, there is no common rule. So this is advantages, types of bill discount. Bill discount, types of bill discount, advantage of bill discount, and the disadvantage of the bill discounts. Okay, now. So this is enough. Next, small topic is Venture capital. This is also one important topic. What is a venture capital? Venture capital is previously we know that that is a risky capital, a risk money capitals or money market. Venture capital is a risk money which is used a risk enterprise either as a equity or debt capital. It may in a new sunset industry or etc. or enterprises. Here, meaning of the venture capital. Venture capital combine a risk capital with a entrepreneur management and use of advanced technology to the launch the new products and companies in the marketplace. That is a venture capital. What are the venture capital projects? Venture capital projects, in addition to the money market, managerial and marketing assistance may also be provided. The venture capital is not only providing funds but also operational advice also. In a short term, it definite himself with the projects as much as investors and promoters such as the workers and etc. And next one is housing finance. Next one is the housing finance. What is the housing finance? Housing finance is received a major focus among the banking and non-banking financial companies, NBs. Banking nowadays the housing loans are provided by the banking companies there and non-banking NBFCs. NBFCs means non-banking financial companies also provide the housing loans. Housing finance sector in India has undergone and some major changes, especially over the past to past 20 years. The cheaper source of the housing finance was individuals and personal savings, and the personal savings of the individuals are uh, supply, supplied by the borrowings from the money lenders. From the money lenders. Okay. The housing finance services means a financial service related to the development of the construction, purchase of the houses, residential houses, and commercial houses. Okay, and related to the finance or properties. A housing finance company provides the national housing bank and undertake the services activities provided the long-term finance for the people or individuals or organizations or business or etc. So that is the housing finance services sectors. Nowadays, they are provided by the some important housing finance services, the HDFC and ICICI and other banks also provided a major housing loans. Next one is the factoring. What is the factoring? Factoring is a finance services, a financial nature involving the conversion of the credit bill into the cash. That is the factoring. Next, forfeiting. Forfeiting is another source of finance against the receivables like a factoring. This is a technique of factoring. Forfeiting is mostly employed to help the exporter for financing goods export on a medium-term basis. It is a form of financing receivables of pertaining to the international trade. This is the forfeiting. Next, mutual funds. Next topic is subheading is the mutual funds. What are the mutual funds? Mutual funds are association of trust public members who wish to invest in the financial instruments or assets of the business sector or corporate sectors for the mutual benefit of its members. So that is the mutual funds. Next, one more important and useful and very well-known item that is service is the insurance services. Insurance service is financial services for the collecting the savings of public in the form of a premium for the policy subscribed by the individuals provided by with the risk of the coverage. So this is insurance. What are the insurance services? Insurance is a financial service for collecting the savings of the public in the form of the premium or a policy and subscribed by the individuals and providing with the risk of coverage. It is a process of the and in the risk the collected money reinvested in other shares or mutual funds, etc. They get some benefit that they distribute among the shareholders. The risk may be certain events like a death, a retirement, a pension, education, marriage, etc. Okay. Next, principles of this is the principles of the insurance. A total 5 important principles is there under insurance services. Number one, indemnity. Indemnity. Second one is utmost good faith and subrogation, contribution, insurable interest. These are 5 important points in insurer. Number one, indemnity. It means that insured person is placed or financed in the same position as the before event occurred. This is the indemnity. Indemnity means that the insured person is placed financial in the same position as was before the event. This is the indemnity. This is the first principle of the insurance. Then second one is utmost good faith. Good faith means a belief. The base of basic principle under the laying the insurance is act under the good faith, both insurer and insurer. Insurer and insured person, the understanding between two is a good faith. The utmost, that is a second principle is the utmost good faith. Then subrogation. The principle of subrogation should be observed. What is the subrogation means? Observed. This means the insurer get all rights and remedies of the insured after the and indemnification of steps into the basis so of the all is the legal rights and normal remedies. This is the subrogation. Next one is contribution. Contribution means the insured should have paid all the premiums due up to the point, and there is only one contributor or the other insurance companies. Next one is insurable interest. So the individual interest, okay, that is insurable interest. These are 5 important principles of insurance. One is the indemnity. Next, second one is the utmost good faith. Next one is the subrogation. Fourth one is the contribution, and fifth one is the insurable interest. These 5 important points of the insurable interest. This is also important question. Sometimes asking the question, this 8 marks question. What are the important points or what are the principles of insurance? What are the principles of insurance? Take it 5 points, explain and we get the use. They are 8 marks question. Clear? Next. Next. Next small topic is the fee-based financial services. Fee-based financial services. So, previous we are fund-based is over. Next year, fee-based. Fee-based means it is related to the banks. Related to the banks. Fee-based financial services, also called the advisory financial services, are the non-fund credit facilities and financial intermediates will charge a fee or commission for rendering the services. That is the fee-based services. Any services given to the customers or who require the services, they get some commission or charges and rendering the services, that is fee-based services. Like a banks, they collect some normal fees. Okay, not a commercial. They get some normal fees. That is a fee-based services. Types offered by the fee-based services here. Major services is services management service. In major fee-based services is the financial services, including management services, corporate advisory services, and credit rating services, portfolio management services, loan syndication services, foreign collaborations, and mergers, and project counseling services is the important services provided by the fee-based financial services. And again, issue management services. Issue management services means like a stock exchanges. They are issuing some shares, and that is issue management services. Next one is portfolio management. Merchant bankers, as a body of the professionally qualified persons undertaking assignment of the managing an individual investor's portfolio. Portfolio management is being the practice as an investment management counseling in which the investor is advised to seek the financial assets like government securities, commercial papers, and debentures, shares, share warranties, and other services is the portfolio management services. Okay. Next, corporate counseling services means it is including corporate activities undertaking the ensure the efficient running uh, of the corporate sectors. Okay, na? Students, so today the class is over. Any problem, please inform me. Put in the like a chat box. Hello. Yes. Students,
Yes, sir.
if any doubts or problem in the language, and Telugu వాళ్ళు ఉన్నారు ఎవరైనా, all are English medium students.
Yes, sir.
తెలుగు మీడియం వాళ్ళు ఉన్నారా, అంత ఇంగ్లీష్ మీడియం వాళ్ళేనా?
English medium only, sir.
ఓన్లీ ఇంగ్లీష్ మీడియం.
Yes, sir.
Okay. One small work. You create one WhatsApp group. WhatsApp group means like this is a sixth semester, third year, sixth semester financial services. Okay. So I am given important questions. I am given important questions and notes in your group. All are టెక్స్ట్ బుక్స్ ఉన్నాయి మీ దగ్గర, అందరి దగ్గర టెక్స్ట్ బుక్స్ ఉన్నాయమ్మా? నా వాయిస్ క్లియర్గా ఉందా? మీదేంటి?
Clear,
Yes.
sir.
Clear. Okay. So next class I am continuation this notes, this book. Okay, na? If any possible, next class I will send the PDF in a before day. I explain the class. Okay, na?
Okay, sir.
Right now, okay. Okay, right. Good night. If any problem, please inform me. Like voice is not there, like video is not there, my voice is not clear. Like if any, sometimes some technical problems like net problem,